Hello, ladies and gentlemen, and welcome to Atomo. I'm your host, Andrew Atomo, and then a miracle occurred. I'll be talking geopolitics and other things that are going on in the world. And I thought, well, let's get the conversation going today about banks, bank rates going up. What's going on? You hear a lot about inflation happening around the world. And we hear from the bank. So in our banking system, you go to your commercial bank where you store your money or you get loans from, and they work off of an interest rate that's usually set by the central bank in the country in which you are. So here in Canada, we have the Bank of Canada. In the USA, they have the Federal Reserve. Bank of England in the UK. But most countries have a central bank. And what happens is, as governments generate debt, what's been happening is in his past times, what would happen is the people would purchase the debt as they would get a bond. So in Canada, we have Canada Savings Bonds. And back when I was younger, I was younger in the 1980s, and thankfully I had parents that would help us pick up Canada Savings Bond. This was back in those Volcker eras, and Volcker, one of the chairman of the Federal Reserve down in the United States, and in Canada and the U.S. kind of play along together when it comes to the lending rates. So as the Federal Reserve cranked up their lending rate back in the 1980s, we were able to get bonds at like 18, 17, 18%. So you put $500 down and then use it to, when I finally went to university, I was able to buy books and stuff using the savings bond. So it's some very good forward looking um, ways of managing money, especially when the interest rates are really, really high. What happens though is your government, if they're running deficit spending and accumulating debt, then they have to service that debt. So an amount of the debt will have to be paid by an interest rate. So if your interest rate is set at 5%, say that's your Bank of England or Bank of Canada is setting at 5%, well, the government's going to have to pay a certain amount of money to service that debt. And governments who would keep a good, balanced budget, and what we say is us in our homestead here, we'd have to make sure if we have a penny, we can spend a penny, especially before the days of credit cards and easy credit was floating around, and in the hopes that our governments would do the same thing. But lo and behold, as money became more flexible through in like 1971, when Nixon went off the gold standard, uh, that allowed currently the banks to play around with currency. As if it's connected to a standard like a gold or a basket of commodities, for example, then in order to transact, you may want to call in the actual commodity instead of getting the pieces of paper or strokes on a keyboard in some banking entry system. So as if we fast forward to the COVID times, if you take a look at your government spending, especially here in Canada, we might have been spending up to $1 trillion. One of the budgets that I looked at was about $500 billion, of which I believe about 350 million of that was not covered by taxes. So that money has to come from somewhere. So your central bank will then issue your bonds, or in the US, it'd be treasuries against that debt, and then sell those treasuries out at market. And hopefully the government is good for that money, and then they can get people to purchase or institutions to purchase this debt. If nobody steps up to buy the debt, then what happens is your central bank will come in and purchase it. So to suck up multitudes of millions of dollars of debt. There's only so much that the public can take on, and you have to have public with deep savings in order to do that. This usually is not the case. What we've been finding is the central banks have been buying that up. As they buy that up, then what happens is that debt now sits on the balance sheet. Now, money and currency is actually brought into the market. Well, what happens is now you have more currency chasing less goods because your productive capacities usually is not increasing as fast as governments can churn out new currency through deficit spending. And it takes a long time to build new industries, build electric infrastructure, or if I'm trying to build like a new office park somewhere, it takes time to set that up and for that to become cash flowing. Um, so what happens is now this money is moving around in your economy. It has to land somewhere. And what happens is you find that food prices and other commodity prices start to increase, or consumer prices. So if you look at the commodity index for the goods that we pay for, I think it's the CTI. I might have that wrong because I'm just trying to go off the top of my head here. I usually get these acronyms kind of messed up. What is a consumer price index, CPI? That's it. And that's been striking at like 8% or something to that effect over the past few months when that print comes out showing us that. So as that inflation starts to go up, your central banks usually have a policy that, especially in the Federal Reserve in the USA, is that they want to limit inflation and want to maintain a certain level of employment. And if um, if that becomes problematic, then what the central bank can do is start to change the rates. However, we've been seeing a fast and furious increase in the rates. So the question is, well, what is it that we're trying to control for? Or are we trying to control for the rapid increase of inflation and getting control of that? And my hunch would be is that the central banks would gradually raise over a period of time and allow the markets to hopefully correct off of that. But the other part is that the inflation has gone so high so fast. As I mentioned, in Canada, $500 billion printed. In the USA, they're trying to pass these spending bills. What might have been, if I make a guess out there, can I say $10 trillion over the course of COVID that was printed? I know one budget, one of the Build Back Better ones, or the infrastructure budget you're trying to pass, I think was $4 trillion. So that money, in order for it to really have a good effect, it has to go into value producing, or the construction of value producing assets within your economy, in the hope that you'll build an asset that's going to provide more value than the inputs of the money that go into that. But that's not usually the case, especially when you have burgeoning government bureaucracy that's growing and growing and growing. That monster starts to consume a lot more money. So we're in a period now, you've seen these rising interest rates that are going very, very fast. And so there's some theories that are in play right now. And one of them is that, well, is there a potential that the ECB, the European Central Bank, and the IMF want to create a sort of supra bank across the world? What this means is your local bank down the street will kind of lose their sovereignty to this larger entity. And if that happens, you have to give your, kind of scratch your head. Well, what is that going to mean for me sitting here in Canada, where there's this entity somewhere else that's beholden to a completely maybe different set of values or national identity, if they believe in national identity anymore? That means they can set your governmental policies, because they can determine then, well, who's going to get money, who's not to get money. Now, if you do bad things, you elect the wrong government. Well, they have tools. Yeah. So yeah, Ursula over there in the European um, Union. There's like different levels of the European Union, and said, well, if you don't do what we want, we have tools. In response to the Italian elections, citing, I believe, Poland and even Hungary had some funding pulled back. So that's one of the dangers of, if there's a one financial entity within the world, then that financial entity can dictate a lot of things to your country. So if, some hypotheticals here, because I don't know the whole where money is sloshing around. If the Federal Reserve and their buddies of the New York banks and the other commercial banks decide, well, we don't want to be beholden to this global entity, and we see that they're using our governments to pass these massive spending bills that are just not sustainable at all. One way to pull the plug on it is to rapidly increase the interest rates. And as those interest rates increase, the government will have to service the debt or potentially go into bankruptcy. And I don't know what that would mean as far as a country going into bankruptcy that can't service its debts. Um, national defaults, it might lead to like hyperinflation of the currency, as you might see in Zimbabwe or back in the German Weimar Republic times, where the Deutschmark went to massive levels. You had to take wheelbarrows of it in order to buy bread. So one of the ways to pull back on that is to raise interest rates. Well, what happens then? Well, the Federal Reserve uh, issues a lot of money uh, in terms of treasuries that can be swapped over to other banks or lent out to other banks or given as kind of bailout or financial relief. Because our financial system is based on when you got good money in at the bottom level, then the banks can, through fractional reserve lending, actually lend out that money in multiples of the input money that's sitting in their deposits. So if the ECB, who had extraordinary low interest rates, I think they went into negative interest rate zone and territory. Then when they get into trouble, because there's only so much liquidity that's in the system, then they've been knocking on the Federal Reserve to get some help. And Ben Bernanke and Janet Yellen have been providing that. But now we have Jerome Powell, and Jerome seems to be playing a bit of a different game here. So it's possible that this large uni financial system is giving a no, no, no to, don't want that. So in order to stop that, we'll have to defund it. Well, what's the best way to defund it? Raise interest rates over Canada and USA start raising interest rates. I mean, money wants to go to where it's treated best. So if you're going to give me a better deal on the money, just say get up to 3%, or heaven forbid if we get up to the 5% in a very short amount of time, then that money starts to pull out of these other financial systems. So what are we now going to see? Well, we've already heard about Credit Suisse, and they got a little bit of a reprieve from the Federal Reserve. I think it was $3.1 billion that was offered, but it wasn't given. It was given what is called a swap. So a swap means I'm going to lend you this currency. They come up with a contract in which there's repayment terms, which usually means there's a little bit of extra interest that's given for the benefit of receiving that money. And so a swap is kind of like a loan. The bank can also swap different types of collateral as well. So if you have a treasury or other country bonds, then you can use that asset and trade it with other banks under a contract. But the big one that's coming up is the Bank of England right now is getting into some sort of liquidity crunch. So it's possible maybe they might need, $50 billion to stabilize, because the money that used to be there in potentially treasuries or other US dollar denominated assets. So those dollars are now getting the big attraction to come back to the United States. So potentially what this could mean is that you'll see these potential crises popping up. And what we're going to investigate here is and take a look and see which banks get a good treatment, which banks don't get the treatment. So this is what I'm looking out for right now. I don't have any hypotheses in play. We'll see what comes up over time. But it was, yeah. So we'll see what comes up, because we're looking at how the financial underpinnings are flowing, and a part of what I'd like to explore in this podcast are what are the factions that are in play. So European Central Bank and perhaps the Davos crowd versus you have China. We can consider them an entity. Russia, but Russia looks like it's creating some trading bloc. More on that in a future video. And we got the United States and their commercial banks, which are a very, very powerful entity. There's a lot of money there, and so a lot of influence and control that they can put into the world system. So these are some of the pieces that are on the game board, and as we go through and have these conversations, we're going to look at what factions are in play and how are they working with each other. Another interesting one, I'll see if I can find the link, is Russia. There's a UN resolution that went through Russia that denounces the referendums that have taken place in Ukraine. So you can take a look at the voting record there and see where the countries have voted, noting which ones have said no to it, meaning they're strongly allied with Russia, from the point of that voting block that just came forward. And also, there's a lot of countries that have abstained, and there's other countries that have voted for this, and that's going to raise some questions. We're going to see how this one shakes out as well over the weeks ahead. So I'm going to stop it here. Thank you for joining me, and look forward to seeing you in the next video.